I don't know why I never record this stuff, but what's going on, ladies and gentlemen? Welcome to March Madness Sunday Market Outlook. I'm super excited, super grateful, and just I have so much clarity today. So much clarity, so much so that we're about to see the markets in a totally different aspect today. Guys, I'm super happy and grateful that each and every single one of you guys that show up on, a Sunday daily basis to get on here. And you know what? I learn a lot by teaching you guys. I learn a lot from you guys too. Of course, when it comes to audio, when it comes to trading, it doesn't matter. Audience is everything. Okay. What I want you guys to do today, beginning this session, I want you to clear your minds of all distractions. I want you to grab your pen and paper. Let's take notes and let's really keep our minds and our eyes open, because what we're about to see today going forward is what I'm going to be using. These techniques I'm going to be using on swipe trades as soon as I get on that. Now, I don't have a determined date quite yet, guys, but when I do get on there, these techniques are going to thwart your Forex trading to a whole new level. Trust me, it's ridiculous. I'm even looking at cryptos with these techniques, and it's ridiculous. We're going to catch so many pips, guys. With that being said, pen and paper, put your phone down. I got my phone on, that's what I'm using for audio, actually. But put your phone down, put all distractions aside, close social media, close everything else. Do not look at your messages. Let's get to work, all right? So let's get started with what we were looking at in the previous week, okay? So I looked at this particular pair, Euro USD, as always. When I was looking at this pair, I wanted to figure out if my technique would work, and it would, and it did, actually. We got a very nice wick entry at the 62% mark on our let me go ahead and close out this other Fibonacci retracement tool. On this Fibonacci retracement tool, we got clicked in on a sell limit at the 62% area. So what this simply means, guys, is let me go ahead and fix my computer here. I'm gonna drag my screen over here so I can look at you guys and look at myself. Perfect. Cool. Okay, so we're looking at Euro USD, we're looking at GBP USD, and then we're also going to take a look at XRP USD as well, Ripple. So what I'm going to show you guys, we've been looking at order blocks. We've been looking at some techniques to spot some specific places to enter the market. And what I really wanted to stress right here, the reason why we got clicked in on this 4-hour time frame, okay? We got on the 4-hour time frame on Euro USD. And I was looking in the past, I'm like, okay, we've got this very nice swing low right here, this whole swing from the swing high to the swing low. We broke this order block. It was valid, definitely valid, but there's more order blocks up in here that we can really go off of. And the biggest thing here, guys, is that what we're really looking at. Let's take a look at the bigger picture for Euro USD. It has been choppy. It's been choppy. I think we discussed this on February 24th, the Sunday Market Outlook on there. When I talked about this is my very first time back here in February in 2018 when I really started sending signals. Okay, we were looking at it from the very top up here, and when we sold it, we definitely sold Euro USD way last year. But if we held it over a whole year's time period, this is the amount of pips that we accrued. But we're not going to talk about last game's points, because yesterday's points don't count for today's games, guys. We got to go in with a new outlook now. Okay, so look at it this way. I want you to look at it this way. So the consolidation period, okay, this is a seasonal change. The consolidation period from February and January all the way up to April of 2018, we dropped for the rest of the year during the spring and the summer. And then we came into fall, and winter, came into the holidays. When we came into the holidays, we then again consolidated. So what does that mean? that means that history repeats itself, right? More oftentimes than not, maybe, I'm saying maybe, we're going to have a long-term sell. And we called this sell from way up here down here to this this gap that was never filled. This gap happened back in 2017, right? That's crazy how that happens. So from this gap, what I'm really anticipating is actually coming down here. And the reason why is because it's a huge liquidity pool. I'm feeling that the banks have placed their orders down here in the 1.7, in the 1.07, 1.11 area. I mean, the 1.11 area is way up here. It's pretty close, but this is the 1.07. My bad. 1.07, 92, and 1. It's just in between like the whole 1.08 level and the 1.07 level that I'm really eyeballing for Euro USD longer term. Now, if I'm going to go in and, find myself an entry, and if I want to hold this long term, how am I going to do this? Well, I'm going to use my Fibonacci retracement tool in a way that it's going to help me find specific key areas, high reactionary areas, with order blocks paired with that. Okay. What an order block simply is, if you guys have never heard of what an order block is, an order block is where price, if you can see right here, this high reactionary area, this is a high reactionary area right here, ladies and gentlemen. So actually, you know what? I would prefer to use an arrow, but not just any arrow. It's got to be thick and light blue. All right. Actually, that's not a very good color. I don't like that color. Hang on, man. I had a bunch of, okay, cool. Sweet. Cell phones. Big distraction. Don't use them. Okay. All right. So this right here was an order block. This whole move is the impulse move, right? So how do we spot order blocks? Well, one criteria, okay? Let's write this down. One criteria for order blocks. I'm going to write out the whole criteria though. One, high reaction, right? High reaction area, meaning impulse candles with full body upside or downside. Okay. Does everybody understand that so far? Sweet. So the next one is going to be the order block. It's going to be a bear. It's got to be a bearish. When it comes to bullish order block, it's got to be a bearish candle before the move up, the initial move up. So 1, 2. Okay. Candle must be bearish before price moves up, and let's put candlestick, or not candlestick, candle should be bullish before the move down. Okay, so let me explain something very, very quick. Okay, guys, I know this sounds really confusing. You're like, why would you say that? Why would you say that, okay, this looks bad. Okay, cool. Why would you say that, a candlestick should be bearish before the price moves up? Well, let's look at it this way. So when banks and institutions, I'm teaching you guys how to trade like banks here. I'm not teaching you guys retail stuff. I don't like retail stuff. I like the fact that I can see what retail is doing, but I like trading with the banks and getting in the trade with the banks to their trend, because they have a trend. Institutional order flow is a trend. Okay, it's the bank's trend. So when I'm looking at this, I want to know, okay, it's bearish, right? How do I determine that this is an order block? Well, if I can take a swing low and a swing high, there's a swing low and a swing high, right? It's going to be a little bit different than your optimal trade entries, being your 62%, your 70.5, and your 79.2%. What's going to be most different is that this order block formed this high move because a lot of people were like, oh, well, we may have reached a, an overbought scenario here. I think it's time to sell. This looks like a downtrend, right? Well, yeah, it is a downtrend, but at the same time, guess what? Some retail traders probably walked up in here and thought, well, I'm going to go ahead and sell it because we came to this right here. Because see this wick right here? It's funny how this works. This is a resistance, right? Let's look at it this way. Okay. Resistance. Okay. Now that we've got that established, retail traders are saying, okay, so support, flipped resistance. Now it's time to sell even more, right? But when we come back up here, we're like, oh, great, new entry, next entry, awesome. Well, no, a lot of people sold right here and got stopped the F out, dude. They got stopped out right here. Okay. That's what the banks are doing. They're taking price. They're showing you a retail setup because let me put it this way, guys. Why are all these concepts free on YouTube? How can we go? Why is it that we're able to go on Google and Google all of these other concepts and trade these concepts, right? 98% of Forex traders fail because they are misinformed. They don't have the right information. Okay. So as we evolve as traders, when we're looking at these, support and resistance is a very key concept when trading with the banks, but we got to know how to use it properly. Okay. So moving on, how do we know this is an order block? Well, we got stopped out as retail traders, but as a trader that's observing the bank's trend, we can go from this swing high right here and go into, and this is the thing. You ever notice how some traders will tell you go and back test, right? Go back, go left, go back in time, right? That's partially true. What you want to know is upfront face value price action, guys. Price action is king when it comes to trading Forex, guys, or any market instrument. So again, with this impulse move up, this is how I indicated. I'm like, okay, great. This right here is my order block. So what information from this chart specifically am I able to dissect the direction? Where can I go with this direction? So I was sitting here thinking, what if I took this Fibonacci retracement tool and had a 62%, a 70.5, and a 79.2. Remember how people say observe the masses and do the opposite? Well, I don't have a 78.6. I don't have a 61.8. I don't have a, you know what I mean? They're just ratios. It's just a ratio. That's all it is. And Fibonacci really realistically only shows you a percentage of retracement and a trend. That's what a Fibonacci tool is specifically designed for, okay? So if you're looking at this, there's the percentage. We're at 62%, right? We did 62% from the previous swing high, retracement, 62%, boom. Hey, guess what? When we're talking about support and resistance, boop. What does that tell you? When we got this is a wick entry, guys. This is a wick entry. I got it. I'll grab my phone and show you guys that I have that order in there, actually. Ooh, hang on one second. So I'm gonna show it to you guys on my cell phone. Okay, where is my account? Okay, so let me pull up the order real quick. Okay, so can you guys see that? If you guys can see that right there, that's where my wick entry is. Right on that 4 hour. Okay. It's right here. It's right here where this wick is on March 1st at 9 o'clock in the morning. That's where my entry is. So what I'm looking for in Euro USD, guys, is that push down to 1.07, and I'm looking for a longer term trade. Now, do I recommend, if you're a position trader, if you're okay with it, if you want to hold it that long, we can hold this for at least another year in this entry right here. Is it going to go up past it? Maybe. I'm not going to tell you that I know everything, guys. I'm not going to sit here and tell you that I know where the trend is. Nobody knows 100% of the time. And if somebody tells you 100% of the time, get away from them. They don't know what they're doing. Okay. So anyways, now we have a 62% pin. We didn't quite reach the 70.5%. There's a possibility of coming back up to that, but I doubt it because of this order block. An order block mixed with a Fibonacci ratio of 62% or 70.5, game over. I feel when I see this, I'm feeling game freaking over. Okay. So with that being said, let's continue with this really quick. So this is our order. This is all of our order block training right here, guys. So high reactionary impulse candles, just like what I showed you right here. Okay. And then the candle must be bullet bearish before the initial swing up. Okay. So let's go back in time where I didn't rehearse anything. And let's go find another an entry where we could have possibly sold. So I'm going to go from this swing to this swing. Okay, cool, sweet. So notice, here we are. There are some order blocks in here, right? Here's a bullish. Here's a bullish, right? Bullish, boom, drop, right? How much was that? If you look at it, it's the 4-hour time frame. So if we dropped, that was 138 pips, right? Now I'm going to show you. Like I said, I'm going to continue to show you how we're going to get our targets, because you guys need to know targets. We need to all know what targets we're searching for, right? So here's the bullish. Here's the bullish. Here's the bullish order block, right? Bing! And we came down here. Now, if we wanted to get an entry on this downtrend, this little downtrend we got on the 4-hour, where is, okay, I need to let go of that so I can get back on my Fibonacci here. Nope, nope, nope. I don't want to use the measurement tool no more. All right, cool, cool. All right, so now that we've got that figured out, how do we figure out our target? Well, here we are, 62%. Order block, order block, order block. The whole thing, this whole thing right here is a daily order block, okay? If you go to the daily, let's go to the daily time frame and I'll show you. What time frame is this? October 2018. Cool. All right, October 2018. Where are you at? Beep. Oh, there we go. Cool. So here it is, the order block, daily order block. What did we do? We went straight into that mofo, guys. Look at that. Pinned it. See that? Easy. Easy setup, guys. So order block, Fibonacci retracement tool. This is a qualification. 2 qualifications right now. Okay, so the third qualification, we need to know that this is in a downtrend. Is it in a downtrend? Yes. Is this order block within the parameters of the downtrend? Yes. Okay, great. So let's figure out our target. All right. So we just sniped the entry. When it came back up here, we sniped the entry, because I'm teaching you guys this right here. How to snipe entries, okay? Blom, 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 blom. Excuse me. All right, cool. No, we need to go back. That's not the example we're looking at. The example is, aha. Come on, screen. Let's go. Where's my October? There it is. Cool, perfect. All right, so here's how we're going to determine our targets, guys. You ready for this? Take some notes. All right, so we're going to go from this swing right here, okay? Notice that I have the 1.272 and a 1.618 on my Fibonacci's, blue. Okay, blue is the target, obviously. And our stop is going to be right here at the red. All right, so now what I'm going to do is I'm going to take my next Fibonacci tool and draw it to this swing, okay? Now, it doesn't look like much, but if you think about it, and this is our entry right here at the green line where this wick was, you just caught almost 200 pips on that 4-hour move, a daily move, man. Because all you did was you went to the bigger time frame. You didn't stay on the 15-minute. You didn't stay on the hourly. You don't really even need the smaller time frames, guys. You really don't. All you really need, guys, is the daily and the 4-hour. But we can go in and look at the intricacies. Man, I can't say that word. You guys can laugh at me if you want. It's kind of funny. But the intricacies, we're looking at the intricacies of these candles. Like if you want to dissect a candle, let's go into a candle, guys. Let's really look at, okay. So I want to see what happened in here, right? What happened in here on the 1 hour? Okay. Well, here we are. Here's our entry. And, right here. This is our entry right here at 1.1407. Okay. So here's our entry. What's going on with here it is right here. This is all this is all that's happening right now on the 1 hour. Amazing. Not really much else to see. It's like when you go look, guys, when we look at these charts, let's not overcomplicate this. Let's make this super simple. Okay. Let's make this super simple. When I'm looking at a time frame is just a breakdown of data, of bigger data than they're really. It's just the 1 day time. Let's make an example here. The daily time frame shows me 1 day of data. Okay, what happened on that day? Well, we go in a little bit smaller 4-hour time frame. What happened on the 1 hour? Because this is what's called a top-down analysis, guys. You don't necessarily need to look at news to know this, but what you do need to know is how to dissect candles, how to dissect from one time frame to the next time frame to the next time frame. Okay, which we're going to cover, which I'm going to go ahead and schedule a training. I'm going to schedule a training for you guys. I might just do it on the spot, actually, like Wednesday or something. But anyways, so the top-down analysis, we went from the daily. We don't even really need to look at the weekly because we already know the direction. We already know the bias, the directional bias, which is a downtrend. Okay, so now that we've discussed what Euro USD has done and where we're at in Euro USD, and we've looked at some examples, remember what I said. Order block. And where's the wick that came up and touched that order? Oh, wait. This, hang on a second. Let me go back here. I screwed up. Okay, nope, it's this one right here. My bad. I keep forgetting. I get a little lost sometimes. It's okay, guys. We'll get through it. All right, cool. So here's the wick. Beautiful wick entry, guys. Slammed all the way down here. Okay. How can we take advantage of more opportunities to get in the market? Well, look, we can get in again in this whole swing. How are we going to get in the swing? Do the same thing. Where's the order block? Right here. Okay. I'm going to take this from our entry, swing it down. Wow. Optimal trade entries hit 79.75 and 0.62, 62%, right? Awesome. We have an order block. We have a Fibonacci retracement tool that shows us where it's literally look at the Fibonacci ratios that are on that order block. Look at that. It's literally touching it's literally just showing you the order block on the daily basis, on the daily time frame, guys. Look at that. Beautiful. Oh, just because that's a doji or a spinning, whatever you want to call it, candlestick, doesn't mean that that's a reversal sign, guys. But if you entered this, look at the profit potential you guys could have got with, I mean, there's obviously going to be a little bit of drawdown in all three entries if you enter all three entries. Golly, dude. Like let's go ahead and do our target. Let's go ahead and get our target, right? Okay. Here's our next entry right here. All three entries. Take this Fibonacci tool off so we can have some good visuals. And then we're going to go down again from, okay, we took it from the initial entry, which was right here. Okay. Let me go ahead and label that for you guys. Okay. I'm sitting here keeping my hand up because I'm putting my arm up over here to, you know what I mean? Kind of funny. Let me get another text and pin it right here. This is our first entry. Oops. In the downtrend. Okay. Next entry right here. Okay. Right here. Boom. Next concept. Okay. Yeah, that's the first entry from the mitigation zone. Wow, John Delzes. You got some fire in you, bro. I'm proud of you. All right. Cool. Okay, so remember, we're looking for our targets. Where is our next target? Okay. Forex traders fail because they don't have any targets and they don't put take profits sometimes and then want to hold it forever. Okay, no big deal. We didn't reach the 1.618. That's perfectly fine, guys. As long as we're hitting targets and we're moving our, like, here's what I'm going to tell you. Let's get a little bit more organized and put this up here. Take 70 to 80% profit on the first, on the 1.618. I'm gonna actually do this. There we go. 1.618 retracement. I spelled that wrong. Okay. Move stop loss to break even. Okay. Awesome. All right. So now that we've got that finished, take that note, put that note down. Okay. Next, let's put this up here. To find profit targets, we use 1.618 and 1.272 extension. Okay. From the entry, draw. I'm gonna go ahead and do this. There we go. Draw fib tool from the entry. No, that's not right. No, okay. From the previous swing low to the entry, AKA swing high. And there you have it, folks. Cool. So with this being our profit potential, okay, we enter, if we're entering right here, this is crazy. Look at this, 1.15. Are you freaking nuts? Hey, quarter level, guys. That's a whole level. You guys know quarters theory? Mike Miles. Boom! That's awesome. That's freaking amazing. I'm so happy and grateful I found that. That was awesome. Okay, so you had a profit potential on the daily time frame of 250 pips, dude. Sheesh. If as long as you're following this super simple concept, right? Just three to four different things you can do. You guys can use harmonics with this. You guys can use quarters theory with this. You guys can use, Fibonacci price clustering and stuff like that, which I'll teach that concept later. And it can be really helpful in this specific scenario when I'm looking for a buildup of layers of Fibonacci, because Fibonacci can also point out hidden, potential hidden support and resistance levels where they matter. Okay. So what we're doing is we're integrating from potential reversal zones to trading in the trend, trading in the zone. Okay. And these are the zones. So do you guys have any questions so far? How are you guys liking this training so far? Sheesh. Oh my God, we gonna make some money. Okay, cool. All right, so we don't have any questions. Moving on. GBP USD. So I'm anticipating the buy at 70.5% at 1.3080. Okay. I placed this in our Discord group for everybody to see. I want everybody to see this. So why do I feel like we're going to go up from 70.5%? Why do I feel that? Okay. Let's look for the necessary let's look for the necessary tools, criteria in order to enter trade. Okay. What do we have to have first? Anybody? What's the first thing we got to look for when we're getting okay? Awesome. The order block. Beautiful. Where's the order block? Right there. The 70.5%. Okay. Next, we're going to draw our Fibonacci tool from the swing low, swing high. Okay. The swing is determined by a fractal, and this is what a fractal is, guys. I'm gonna describe this. So I know this looks, oh, that's too close. Okay. The fractal is previous close, right below this, this closing price. Okay. Or right above, I'm sorry. It has to be above this closing price. So this is a fractal. This is where a bottom is. This is where a bottom in a trend or bottom in the market is. Okay. So now that we figured out where our order block is, right here at the 70.5% retracement level, what's next? What's the trend? The trend's obviously an uptrend. Okay. So we've broken some highs and we've broken some lows, right? We've closed above all of these highs right here. What's everybody going to anticipate? They're going to buy off of this right here. People are going to get stopped out on this. Trust me. People are going to get stopped out on this. People are going to buy it right here. And it may even go up. Who knows? What I'm looking for is probably, we may have a gap on the smaller time frames, and then we're going to drop. We're going to cover that gap and drop to 70.5%. That's a possibility. I mean, look at it. Look at this. I want you to look at this, guys. Pay attention. It's probably going to be right here, actually. Nope. It's this one right here. Cool. Here we are. Could have had an entry right here. I qualified. Why did it qualify? Anybody? Order block. Ding, ding, ding. Order block. There it is. See? Shoo! Order block. Oh, there we go. Cool. There it is. You would have got a wick entry. Bing. How do we find our target in this one specific scenario? Here's how we do it. I have to double click to get that off. Okay. Here to here. Okay. So this is our entry. Say this is our entry, theoretically. Bing. 285 pips and 362 pips. Score. Awesome. I get so excited and geeked out over this stuff. I don't know why. No, I know why. I love it. It's my passion. It's y'all's passion too. Okay. So now, moving on. I like to be a little bit goofy in our market outlooks. Why be so serious? The Joker. Okay. So we've had plenty of opportunities, and this is the funny thing. We don't know. We're always evolving as traders, right? We don't necessarily always know, like, if we're where the price is gonna go, right? But we can get really excited about these other opportunities because we don't know about these opportunities specifically. There's so many different opportunities in the market. There's so many different ways to trade that we don't realize, you know, we have literally almost all the tools necessary, okay, to succeed. Do you draw your fib off of the order block? No, I don't. Nope. Let's go back here. Okay. So I need to put that on there. I need to put the rules up there. I forgot all about that. Let's make a really clear picture and not confuse everybody. I'm probably going to drop this. I'm probably going to save this and then just send this to everybody for educational purposes. I really want to drag these out, these pieces over here. Let me go ahead and like copy and paste this. Okay, so you guys already have these notes, right? If you guys already have these notes, awesome. If not, I'll send them in the chats for you guys to take down. So we have a clear, let's label these really quick. Okay. Cool. Order block. Okay, so since we have that order block, we qualify for this specific move, 62%. Okay, how do we go and draw our Fibonacci tools? Here's how we do it. Okay. Okay. Oops, that's not what I meant to do. From the swing low or high relevant to price and the trend, we will draw our Fibo tools in accordance to defined lows and defined highs. Okay. Beautiful. We got it. Okay, so does that answer your question, Michael Davis? Water, essential for life. So how does everybody feel? Do you guys understand? If you guys understand how to draw your Fibonacci's, please drop a 111 in the comments. Awesome. Okay, so if you understand how to spot order blocks, drop a 222 in the comment. Two half. Okay. Well, refer back to this YouTube. Refer back to this video in YouTube, and take notes from those YouTube videos, guys. I'm posting these up here every single week. I don't think I posted 24th. I need to post that before I post this one. But remember, impulse move to the upside. It's the fake movement. It's a fake movement. Okay, guys? So order block means this is the bearish. Remember, we had to have a bearish candle before we had a bullish order block. Okay? This is a bullish order block. Bearish candle, bullish order block. Okay? Awesome. So let's look up here. Bullish candle, bullish candle. Let me say that again. Bullish candle, bearish order block. Let me define these. Bullish. Spelled that wrong. Bullish, bearish. Okay. How did we find that order block? Well, impulse move to the downside, and we draw our Fibonacci tool from this order block down to this swing right here. And what do you know? 79.2 retracement. All three orders were hit. Okay, how do we find the target? Well, guess what? We hit both targets, ladies and gentlemen. And our profit target, or our potential profit was, well, somewhere around 700 pips. Okay. Now, so the last candle before a turnaround in a trend. So this specific, I'm going to go in here and dissect this really quick for you guys. Okay. This right here is an order block too, guys. And we actually could have taken an entry on that too. Let me zoom out and show you. Yep, there it is. Entry right there at that order. That's the order block, 79.2, 70.5, and 62%. Boom. Cool. Awesome. So what I mean by that, do you guys remember if we go back to Euro USD, where is the previous notes? Okay. Let me copy this, bring it over here. We gotta go in here first. Okay. And I'm gonna break this down so that way we can actually see it the right way here. Okay. Awesome. Okay. So we have to have these criteria to know what an order block is. It's a high reaction area right here. Okay. Check. High reaction area. Candle must be bearish before the price moves up or down. Okay. Bearish or bullish, right? Bullish. Impulse. Check. And then what? Bullish. Bearish impulse. Check. Awesome. So now we know that. What else do we need to know? Let me go ahead and just drag all this over here because I really complicated all this. Oh man. Okay. Copy. I think what I'm really gonna do is I'm gonna take all these notes right here and go ahead and either I'm gonna print this off. I want to try that. I've never done that before. Printing off, charts and stuff. I've been told that if you want to learn how to tape read, you gotta do that. Okay, cool. So we're just really putting all these rules in here so we all know like what the rules are when we're looking for these setups, guys. Let's put this right here and put that right there. Keep that right there. Okay, cool. Order block. We've covered that. From the swing low to the swing high on the next, when we find ourselves an order block, we found an order block. So what's next? Next, we look for the swing high and the swing low. So when we have a defined swing high and swing low, then we can draw from the swing high to the swing low our Fibonacci tool, and we can go and find our entries, our optimal trade entries. Let me define that too for you guys. Okay. Optimal trade entries are at the, put it down here, 62%, 70.5%, and 79%. Retracement levels. Okay. Now it's up to you to define risk, like what you guys want to do for risk. Typically, what I'm doing is about 30 pips per trade. When you're on these bigger time frames, it's a little bit harder to do a 30 pip stop loss, because obviously it's a bigger time frame. But there's a way to go and get a 30 pip stop loss. All you have to do is go down to the lower time frame. Okay. And look for like, for example, if we were to break down October 11th, 2018, we're going to go down to the 1 hour. Let's try to find the go to button, but I don't know the go to button on here. I don't know where it's at. If you guys know where that's at, let me know. I don't remember where the go-to button is on here. Okay, so we're gonna go all the way back to October 2018. Might take us a bit, but that's okay. Ooh, I like these. Look at all that. That was when we were using our cipher divergence and stuff. Bing, 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 bing. Okay, now we're looking at, what was the high? What was the high that we were looking at? It was right here, wasn't it? It was this, I really wish I would have like highlighted that, but that's okay. That's perfectly okay. Okay. All right. So within the hourly time frame, what you're gonna really want to do here, folks, is just like you're gonna look for those order blocks, right? So if we were to come here for this order block, what criteria do we need to meet in order to get into this trade? Right here. Bing. I mean, you've got plenty of ways to enter in here too, because you've got like right here, entry. Then you go from here, or you go from like right here to here, entry. You can eventually, when you start drawing these enough times, you're gonna really just be able to eyeball this stuff, guys. So break it down. Let's break it down here. Let's go over here. Okay. So you have this order block right over here. We come over here for the entry at what? What is our entry? Go from here to here. Let's drag this up here. Okay. What's our drawdown from this entry right here? 36 pips, 40, maybe 40 pips. See, here's the thing. This is why we don't most of the time want to put limit orders in, because when we put these limit orders in here, it's a little bit difficult because we may or may not get stopped out. And the reason why we get stopped out is because obviously we're not playing price action. We're supposed to be playing price action. Okay. So more oftentimes than not, what I'm going to be doing is I'm going to be doing market executions when I see order block, when I see Fibonacci line up and everything else lines up like that. Boom. That's just kind of where I'm at with, when it comes to getting in the market. I want to have, I want to be able to control everything. That's my psychology. I don't feel like a limit order most of the time is going to allow me to control my trades at the optimal level that I could be controlling it at. Okay. Let's go in here and do another example really quick, and then I'll let you guys go. All right. Order block. Bing. Let's go ahead and dissect that. Remove. And this is where our entry was, right? 70.5%. We had bullish impulse, spike up, boom. Where do we define our target? Here to here. These may be very short, but geez Louise, look at the entries though. Look at the consistent entries here. Okay, we're gonna measure this move, guys. 141 pips is not bad, especially on a 1 hour time frame. Yes, alarms. Jordan says that all the time. Set alarms, dude. Set alarms. I'm like, I forget. I forget. Okay, guys. So that's going to be the conclusion of today's training and market outlook. Actually, no, it's not. I got to go look at XRP. Ah! Fooled you. All right. So, I wanted to get in some cryptos. I wanted to see how this is going to work out, how this is going to play out. Right now, we're on the 4 hour time frame, and I'm looking for a buy setup right here, 70.5% and 79.2%. Okay, program that in 79.2, not 79%. So here we are from swing high, swing low, right here. Okay, from the swing low. No, not that swing low. My bad. What did I mess up here? Did I mess something up here from this swing high? I'm not sure. Let me redo this. I'm going to redo it right in front of you guys. I'm going to clear this whole thing up, and I'm going to redo it right in front of you guys so you guys can see a live markup. Okay? All right. So I think what I'm going to do is I'm going to go from this swing to this swing. Okay? The reason why I'm looking for a buy order is because here's an order block. We dipped into the order block, and this is where our buy was. So can we determine another buy entry right from here? This could be the buy entry right here, and we can continue up to these levels right here. Okay? Now the stop losses are going to be a little bit different because obviously it's crypto and it moves weird and it moves faster. It has a little bit more volatility and has a little higher percentage of pips in between. Okay. So from swing low, swing high, ceteris paribus, meaning that all things equal, all things, you know, staying the same, assuming that we hit an order block, which we did right here. Here's the order block. Boom. Bearish before impulse. Bing! There it is. Okay. So this isn't going to work every time, guys. I just want to put that out there. This is not going to work 100% of the time. I'm here to tell you it's not. Is it going to work the majority of the time? Maybe, depending on your psychology, depending on our psychology, right? Does it matter if you draw off the bodies or the wicks? It's all on preference, honestly. I like drawing off of the wicks, to be completely honest, because, I mean, like, look, if I were to draw off the body, would I have any room to find anything in here? I probably got stopped out already. So I like to, you know, this is a swing. This is where price has been. It's obvious. It's data. And it shows me an accurate reading of the order block. Okay, impulse. Boom. Look at this. So we dip back into here. This is an order block, guys. Can we determine a buy from here? Yeah, from the order block, but not from a Fibonacci standpoint because it went. That was almost up. That is 100% or more retracement. So from we would have to do this. We would have to gauge this from this swing here to this swing, right? So let's do it again. Practice makes perfect, right? Okay. Delete this Fibonacci. Okay, we've had multiple times to re-enter, 79.2%. Okay, what did I say? Bearish order block before impulse to the upside, right? Cool. Bearish impulse. Okay, Fibonacci finds our order block. Fibonacci, let me rephrase that. Fibonacci does not find our order block. We find our order blocks. Okay, so I really don't know if I want to share this video on YouTube. This is very valuable. Oh, well, I'll share it anyways. Okay, guys, so that concludes today's market outlook. If you guys have any questions, feel free to hit me up on YouTube, Instagram, Telegram, Discord if you're in it, Facebook. Hit me up, ask me questions, and feel free. Love you guys. So this is gonna be epic. I hope you guys have a great trading week. Take these concepts, go and look at my Fibonacci retracement tool, copy my Fibonacci retracement tool, go on YouTube. Thank you guys for tuning on here. For those of you that are tuning in right now on YouTube, copy this stuff. Great valuable tools right here. I love you guys. Have a great week, and make sure to share some of this content with people. If you feel like people could benefit from this content, share it so that way everybody else can win. All right, guys. With that being said, let's go get this trading week started. Love you guys. Peace.